Tuesday, the 24th of April, was 13 days. Now, is it possible that a 20-day cycle trough could have occurred after 13 days? Yes, it's possible. One of the very important principles of Hurst's cyclic theory is, of course, the principle of variation. The principle of variation tells us that the wavelengths of cycles varies all the time. Okay? Hurst, in fact, never defined a limit to the variability of wavelengths. When creating Sentient Trader, I had to define an actual limit, and I can tell you that the limit for the shortest end of a particular cycle is 65% of the nominal cycle length. Now, the nominal cycle length, which is the average cycle length of the 20-day cycle, is in fact 17 days. So the shortest that you would ever expect a 20-day cycle to be is about 12 days. Okay, so it is possible that the 20-day cycle occurred here on the 24th of April. All right. It's also possible that the market's going to move down and still form a trough of the 20-day cycle. So it is possible that we haven't seen the formation of the 20-day cycle trough yet. Now, how will we know when the 20-day cycle trough has formed? Well, we'll know when the price crosses the 20-day FLD. Okay, so there is the 20-day FLD. It's a cyclic tool that we use, a very simple line that we plot on the chart. And when price crosses that 20-day FLD, then we'll know that a peak of the 20-day cycle has occurred, and the price is on its way down to the trough of the 20-day cycle. Now, as you can see, on Tuesday, the 24th of April, price over here was not below the 20-day FLD. Does that mean that it is impossible that this was a trough of the 20-day cycle? No. Markets are not perfect. Sometimes troughs form above the FLD. In a perfect market, troughs would always form below the FLD and peaks would always form above the FLD. But the markets are never perfect. So that is not incontrovertible proof that the trough of the 20-day cycle has not occurred already. Okay. So what are we expecting to happen now? Well, we are expecting price to come down and possibly still form a trough of the 20-day cycle, or in fact the trough of the 20-day cycle might have been formed already. But effectively we are expecting price to form a peak fairly soon, which is probably going to be the peak of the current 40-day cycle, and then in simple terms the market is going to move down towards a trough of the 40-day cycle, which is expected towards the middle to the end of May of this year. Okay, so we're expecting the market to start moving down. Now, of course, the market won't move down in a straight line. It never moves down in a perfectly straight line because of all the shorter cycles that are going to be playing. On its way down, the market is going to form a trough of a 5-day cycle. Then it'll bounce up again. Then a trough of the 10-day cycle. Then it'll bounce up again. And then another trough of a 5-day cycle until finally it forms a trough of the 40-day cycle. Okay, that's why analyzing markets using Hurst cyclic principles is so fascinating, because there are so many cycles that are constantly working together to form the complex movement of the market. The market never moves in a straight line. One of the mistakes that people often tend to make when trading the markets is they focus on one cycle and then they expect the market to move in a straight line according to that cycle. Okay? But of course that never happens. So we're expecting a peak to form fairly soon, and we're then expecting the market to move down. Let's zoom out again and take a look at some interesting divergences that have developed between the US markets and the Australian markets, which I think are raising warning flags for the Australian market. I think it indicates that, in fact, the Australian market might be about to crack downwards, but let's have a look at the detail. First of all, as we've been discussing, the market has been moving up from a trough in October. That was an 18-month cycle trough. And let's have a look at the shape that this particular cycle has been taking. As you know, I'm very keen on cycle shapes. That's why I speak about the M shapes that are found in cycles and so on. So the first part of this cycle shape, of the 18-month cycle shape, is a move from the trough up to the peak. Now notice something. That peak occurred after a very short time. It was only about 3 weeks after that trough. Okay? And then the next move is the move down to the down to this trough here, the 20-week cycle trough over there. Okay. Now that is a fairly bearish shape. Why is it a bearish shape? Well, it's not bearish because the intermediate trough here is quite a lot higher than the first trough. That doesn't make it bearish. In fact, that makes it look quite bullish. But what does make it bearish is this very early peak. Okay, when you have a very early peak, that is an indication that a bearish cycle shape is developing. Okay, when you have a late peak, that's an indication that a bullish cycle is developing. When you have an early peak, it's an indication that a bearish cycle shape is developing. It's as simple as that. Okay. So now, if the first shape that's been developing here is fairly bearish, then of course we expect the second part of the M shape to also be bearish, okay, because this is the same cycle that we're talking about. So we would expect the peak in this second part of the cycle to occur fairly early. It's already occurred quite a lot later than that first peak. Over here, that first peak, as I mentioned, took only 3 or 4 weeks before it developed. This peak has already taken about 7 weeks to form. Okay, but nevertheless, we are expecting to form quite soon, because that will still make it an early forming peak, and then we're expecting price to move down towards the trough of the 40-week cycle. Now, in this particular case, of course, we're expecting the trough to go quite a lot lower than this intermediate trough over here. So generally, we're looking at a fairly bearish picture unfolding in the Australian markets. I see Jitendra says, wasn't sentient ST outlook for S&P indicating that it is heading for a larger time frame trough, and therefore both the US and Oz are heading the same way? Well, yes, absolutely, and I'm saying the same thing here, that the markets are heading down towards that trough. Perhaps what you're doing is you're highlighting the difference between the US markets and the Australian markets. So let me show you that difference already. The difference is very simply that the Australian market has not necessarily formed the peak of the current 40-week cycle. However, the American markets have. Okay, I say the Australian markets have not necessarily formed the peak, because in fact this peak back here on the 24th of October might still prove to be the peak of the 40-week cycle. Let me just zoom out and say that again, just in case it wasn't very clear. Let me zoom out. And okay, Jitendra understands. Phil, I haven't expressed it very clearly. Let me just repeat that. We're looking at the 40-week cycle now. Okay, and so this is the 40-week cycle in the Australian market. All right, the 40-week cycle will have an M shape, and so you can see it here. There we go. I'm trying to draw it roughly parallel to price, and then it's coming down towards that trough. Okay. Now, the first peak of the 40-week cycle, the first peak, not necessarily the peak. There are always two peaks for any cycle. As you can see from the M shape, there's the first peak and then there's the second peak over here. So the first peak of the M shape of the 40-week cycle formed here in late October 2011. Okay, if I get that date, it's somewhere there, or might even have been 1st of November or something. Okay, so the first peak of the 40-week cycle formed very early at end of October 2011. Price then came down to form the intermediate trough, which is this point here, the trough of the 20-week cycle, in early March of 2012. Price has then been bouncing upwards to form the second peak of the 40-week cycle. Now, it is about to do that, and it is probably going to do that fairly soon in the Australian markets, and then it's going to start moving down to eventually form a trough of the 40-week cycle, all right, which we are expecting sometime in the European summer, or of course the Australian winter, July, August, September. Sort of time period for the 40-week cycle trough. Now, how does this differ from the US markets? It differs from the US markets because there is evidence in the US markets that the 40-week cycle has already seen the highest peak that it will yet experience. Okay? I'll say that again. It has already seen the highest peak. The Australian markets have not necessarily. Okay? This peak here in the end of October 2011 was right up here to a level of around about 4,400, maybe just above 4,400. The latest close was at 4,375. So we're getting close to that peak. It is still possible that the markets might move up higher and form a yet higher peak up here above 4,400 before turning down. Okay, and that will make that